To get started, the U.S. government required disclaimer. Forex, futures, stock, and option trading is not appropriate for everyone. There is a substantial risk of loss associated with trading these markets. Losses can and will occur. No system or methodology has ever been developed that can guarantee profits or ensure freedom from losses. No representation or implication is being made that using the strategies or tactics or the information in this website or accompanying material will generate profits or ensure freedom from losses. So no representation is being made that any account will or is likely to achieve profit or losses similar to those shown. But with that said, everybody, I'd like to welcome Adam Mesh and Todd Bubba Horwitz to the call. And I can tell you from sitting next to these guys that some of the things that we're talking about in here definitely are real. So hold on, everybody. The disclaimer is real. Yes, all the things are real. I apologize. Everything that we're going to show you is real, but we do have to have that disclaimer regardless. So hold on, everybody, and here is Adam and Todd.
Well, I'll start. I'll talk while we're waiting for Adam to get in here. How's everybody doing?
Hey.
Hope you're ready.
Hey, Todd.
Hey, there you are. How are you?
Sorry about that. What's up, Todd? Apparently, with this system, if you touch anything, then it shuts off the computer, so I have to be careful. I can hit the arrows, though, right? All right, everybody. Well, interesting couple of weeks in the market. Welcome to the call. I'd like to thank the Trading Pub for putting on this event. Definitely excited to be here. You just heard Todd's voice, but I'd like to introduce him, and I'm excited to do that right now. Just a little quick backstory about what we're going to be talking about tonight, the Options Money Machine. It's interesting. Todd, who you're going to meet in a second, was the one who talked to me about the service and really encouraged me to try it because I had never traded options before. I was always a stock trader, good at recognizing levels, and this was something different, and I was resistant, but he was like, you got to try this, and I'll explain the whole story. But it came at a point in my trading where I just made a bad mistake. I was trying to short GameStop, symbols GME, don't do it. And it was on a fundamental belief that the company would be extinct. Needless to say, the stock went against me. I took a big hit. And one of the nice things about this service, this income strategy is, it, in my opinion, very controlled and conservative. So I began selling out of the money puts each week, and I was able to make back what I had lost, and that's to trade conservatively. So rather than digging a deeper hole, this got me back. So not only am I excited to talk to you about it, it's a service I use week in and week out, and I'm just really proud of what we put together. That being said, I'd like to introduce Todd Bubba Horwitz. He is a 30-year member of the Chicago Exchanges, founder of Average Joe Options, and he's a regular contributor to Fox Business, CNBC, and Bloomberg. And in fact, he was just co-hosting Fox Business the other day, and I took a screenshot of this picture, Todd, with Todd in between Maria Bartiromo and what's the blonde's name? I'm not even sure.
Sandra Smith.
Sandra Smith, and in.
Oh, we lost him again here, I think. Yeah, that is me with Sandra Smith and Maria Bartiromo last Friday morning on hosting the opening bell. I do a lot of Fox, and I do them all, Fox, CNBC, and Bloomberg. But I do go in studio quite a bit at the Fox network. So it's always fun, and actually Sandra is a Chicago girl. So
can you hear me?
I can hear you now. Yes, sir.
Sorry about that. Literally just removed the keyboard. Literally anything I hit, I log out. All right. So yeah, I took this shot, and what she was saying to him here, if anyone wants the video, let me know. We'll send it to you. What she was saying to him was that you know more about options than anyone we know, which I thought was a really nice compliment. And then they were asking what he thought the best strategy was in this volatile market, and he said it was weekly options, and they both nodded their head in agreement. So that was a great shot I just captured. This was last week, I think on Friday of last week, so a very recent picture, and it was cool. All right, let's move forward and explain what this options money machine is, shall we? Oh, by the way, my name is Adam Mesh. I've spent 17 years as an electronic trader. I founded the Adam Mesh Trading Group in 2008, but I've been trading since the 90s. Been well reviewed across the board. Consumer Digest gives above average trading advice. Proud of what we accomplished. And the interesting thing is me as an electronic trader, I started, and that was a relatively new market when I was doing it. Trading on computers was not something that was new in the 90s. It was brand new. And the thing about this service, trading weekly options, it's less than 3 years old. So it's still in its infancy stage. And the nice thing about getting in early on these things is there's a lot of room to take advantage. When you're early, you take advantage. How many of you guys agree that just in your lives, it doesn't have to be trading related, there's always been advantages to being early. And that's what you're going to see with this. Okay. So tonight we're going to be talking about the origin of the options money machine, how it began. We're going to define what our strategy is. We're going to talk about what makes it so exciting. We're going to give you real-life examples of this strategy in action. We'll talk about how we did when the market went down 1,000 points in January. February perfection, I'll explain what that means. We'll talk about what's happening right now, how you can take advantage of it right now, and we'll do a live Q&A. Okay? So the origin of the options money machine, is Todd came to me. Todd is a very successful options trader, someone that I go to for advice all the time. And he said, Adam, there's this new thing out there. You've got to be doing it. This was a year ago. And what he said is, you have such a good ability to identify technical levels in stocks. You could sell puts against those levels. You're like, I don't know. He's like, this is what guys like Carl Icahn are doing. And at the time, Carl Icahn was making his big Herbalife play, where he started by selling puts, collecting premiums, and then using that to buy calls. And he made a fortune trading Herbalife. And he started with this. And so I said, I'm going to commit to doing 17 trades. That was my commitment. So I was like, all right, I'm going to try 17 trades. And I locked in 17 100% winners in a row, which I was thrilled about. And that was how the origin of Options Money Machine began. And the Options Money Machine, just to define like what it is exactly that we're doing, is it takes advantage of the weekly options market. And I said it began around 3 years ago, okay? But it's just now starting to get more attention. You see the volume picking up in these weekly options. This is what the tier 1 hedge fund guys and activists like Carl Icahn and George Soros are doing. And for us, it's simply an income strategy that's averaging $150 to $300 per week with an 89% annualized return. And I'll obviously explain very clearly what selling out of the money weekly options is. And I know there's going to be questions and comments that come in along the way. If I don't answer you, it's just because I don't want to disrupt my own flow of thought. I will answer all questions live at the end, so you can write them in or you can write them again, and we'll make sure to get to them. One thing I will say here is the most common question we get asked is, are you selling these naked? And what we do is we do it 2 different ways. We either do it as a naked put selling or as a spread trade. And we offer both for each trade. And that's actually changed a little bit. I'll get to that later on. But I'll explain what the difference is and why both are an option and who might be right for either strategy. But we do both. So it's either naked or as a credit spread. Okay. So what makes the Options Money Machine so exciting? For me, I narrowed it down to 3 things. The first is you get discipline. And what do I mean by this? Well, you guys know with the Trading Pub community, a lot of you guys are already like a step up in the markets and you're somewhat involved. And when that's the case, you're probably experiencing one of 2 things. One is you're sorry, I hear beeping. Okay. Okay. Yeah, I'm good, right? So like a beeping in my ear. Okay.
You're perfect.
So, thanks, Todd. That's weird. So when it comes to getting disciplined, people either don't trade enough, right? Or they trade too much. Just by writing in me and me getting the feeling of communicating with other people out there, how many of you feel like you suffer from information overload or paralysis by analysis and you're factoring in too many things? At the end of the day, you just do nothing. How many of you are in that category? Just say me if that's you. Z, John, okay. Okay. And now the other half is going to fall into the category. How many of you are in a situation where sometimes you maybe trade a little bit too much and you get yourself out of positions that you didn't need to get out of? You sell too early. You just feel a little bit like you make things worse instead of better by doing too many trades. Right? Okay. Stronger reaction there to overtrading. So I've worked with thousands of people in my private coaching business, as has Todd, and we've definitely seen both. Todd and I fall into the category of overtrading. And overtrading is, for us, when you try to do too much. Sometimes as an earnings play, maybe trading a stock multiple times, more than I need to before it breaks out of a range. Thinking too much about the market. In that GameStop scenario, in the past, what I've done when I took a big loss is try to make it back right away by buying a bunch of shares of something else. And then, you look at a stock like Bank of America and you think, oh, it doesn't move that much. So I could buy 8,000 shares, but you know what? Every 10 cents is then $800, and it adds up. So for me, especially in situations where I've gotten myself in trouble and I took a loss, what I love about the discipline about the Options Money Machine is it's a weekly trading service. So each week we put on these trades on a Thursday, and then you don't have to do anything until the following week. And that's it. You're not going to go back in and change your position size because what you're playing with in this, which is really interesting, is the concept of time. You're trading against, and you're using time as your advantage. So once that clock starts, you can't keep modifying that trade the following week. The trade's on, and you've already, by putting it on Thursday before the following Friday, you've taken advantage of that time premium. So you can't make more trades, you can't make less trades. These are your trades. You're set for the week. It lowers your commission costs, which is a nice thing because you're not over trading, and it keeps you disciplined and emotionally neutral. And that's really helpful because how many of you guys thought last week that the market was going to head another 1,000 points lower? I know I did. I know Todd did. And everyone always asks me. Every day I get asked, what did you say, Todd?
I did. I said it on TV.
Yeah. Yeah. Harry said, not me. A lot of people did. I did. And everyone, I get asked all the time. People always ask me, like, where are we going next? And I always say I make a living by not predicting where we're going to go. And this Options Money Machine is a great thing because we had some spreads on while the market was going down, and there was nothing to do but leave the spreads on. And for those people, they came all the way back. And if it was me making the decisions, just trying to predict where the market was going to go, I would have been out, as I was on the naked trade. So it keeps you very disciplined, and you don't overreact to the market. That's the first thing I love about it. In terms of organized, as an overtrader, when I look at my screen and I see 50 positions or 30 positions, which I try not to have, it's a lot. And the nice thing about this is when you put these trades on and they expire the following week, it cleans out your account. So you see everything get cleaned up the following week, and you're not looking at a lot of trades. And Todd and I both know when you reduce the number of stocks that you're trading, you gain a lot more control and you improve your ability to react in the market. And for me, it's been phenomenal this year. Lastly is in selling weekly options, you get paid every week. Now, who amongst us doesn't like to get paid every week? What I love that Todd showed me about this Options Money Machine is it's the best kind of deal in that you start off the relationship by getting paid. And that's just priceless to me, getting paid to start a relationship. And then the last part about it is, and I have this coin picture of a time machine, Imagine if you could go back in time and take advantage of missed trades. Now, do I have a time machine that I'm trying to tell you? No. But when it comes to the options money machine, let me give you an example, okay? How many of you have ever looked at a stock that I want to buy that, and then life got in the way, time got in the way, your significant other got in the way, and you missed the trade, only to find that it was much higher a couple of days later? How many of you have had that experience? Right? Yes, right in yes, yeah. I know everyone has. If you're trading, you've had that experience, okay? And I've had it. So for me, the first options money machine trade I made, right, Joe said I've seen it all. The first options money machine trade I made was GoPro. JJ next to me, he traded that a lot. Absolutely. I was like in the what, 30s, 40s, went to the 80s. Absolutely. So the first trade I made, I was actually long the stock Starbucks. I bought Starbucks at 70, and it went up to 72.50. So I made $2.50 in Starbucks. But like everyone else, when you make $2.50, what do you think? You think, I should have bought more. And that's exactly what I thought in the Starbucks trade. Why didn't I buy more? I knew that 70 was a great level. That was the trade. I missed it. I should have been up more money. What do I do now? So what I did was I sold puts in Starbucks. I sold the 70 put, giving someone else the right to own it if it went down to 7, giving myself, saying I'm willing to take ownership if it went down to 70, okay? So here's how that works. Stock's trading at 72.50. I'm selling the 70 put that expires on the Friday, weekly options. So I have to be in it for 5 days for this one, okay? So my break even, I sold it for 67 cents. So my break even is 70 minus 67 is 69.33. It's trading at 72.50. So all it has to do for me to be profitable is not go down over $3 in that week. So if it stays at 72.50, I make money. If it goes higher, I make money. If it goes lower but stays above 70, I make money. Now, what happens if it goes down to 70 or below? Well, I take ownership. And you know what? That's exactly where I wish I would have bought more anyhow. So that's why I call it a virtual time machine, because I'm committing to buying it at the price I wanted to anyhow. But if it doesn't come back to my price, I'm getting paid for being right about that level. Now, what happens when you take ownership? Well, you could either hold a stock, and a lot of the stocks we do, almost all of them are very conservative dividend-paying stocks. So you'll get paid your dividends, and it'll be a nice add to your portfolio that will tell you how to get in and out, how to get out of at the right time. Or you could put on that vertical spread, buy a put below so you know your downside is capped, so you're not taking ownership, and in that case you would take a loss if it went below that. So you can cover your downside as well. I've always done the naked trades. Todd's always done the spread. I'll explain why I'm starting to move on to the spread side a little bit more too in this current market, but that's what it was. And let me show you what the Starbucks trade looks like, okay? This was the Starbucks trade we made. The bottom green line, the first green line at the bottom is the 70 level. That's the support we loved. The next horizontal green line is our entry point, okay? The vertical green line in between the two is the head start we had. So we had a nice head start. The stock ended up going to 75. I still owned some of the stock, okay? I still own some of the stock, but in this case, I also got paid because my $70 weekly option expired worthless. And no, Pat, we've moved on from this time, the time machine slide. Okay. Let me show you another example of a trade. Let me show you what happens when you take ownership. This was a phenomenal SLW trade we made. There was major support around the $20 level, okay? Now, the stock went up to 22, okay? And we sold, I don't remember now if we sold the 22 or 21.50. Whatever it was, we sold the put for 30 cents. We took ownership at 22. I'm sorry, we took ownership. We sold at 22 when it was a little bit above it. We took ownership at 22. Our break even was 21.70. on 4 contracts, the stock went to $26. Okay, we moved up our stops, and we ended up making $1,000 profit by selling that 30-cent put on this SLW trade. Okay, so remember, the beauty of this and the puts that we're selling are stocks that we want to own anyhow, and this was a great example. Same with LNG. Look at that gorgeous baseline of support. That's the beauty. How many of you guys have ever been able to recognize a stock and said, you know what, this looks great. I know it's not going to go down. I don't know how high it's going to go, but I know it looks good right here. And that's what we found with LNG around that support. We're like, all right, it's coming back down. It's around this level. It looks really good here. We don't know if it's going to pop that much, but we like that support. So we sell the option. And we did it here. It ended up dipping a little bit, but still above the 40 level, as you see by the diagram. We took ownership above 40, and this one was another $1,000 winning trade. So when we're taking ownership, a lot of times that's been the best possibility. Here's a chart of Walgreens, okay? Here you see again, this was this is a stock we've traded a lot, and we just put on a Walgreens trade yesterday that already made 70% from yesterday to today. Walgreens finds these baselines of support, and we've sold puts against this oftentimes, and they just continue to expire worthless. And this was just an example of another one that we did there. For the stocks that you're looking for to do nothing, Altria is a great example. MO. This one gets into these trading ranges. You see from February to March, it was sitting around 35. And then from March to April, it was sitting around 36.50. So this stock got in a groove where every week it just continued to pay us. It was like Altria was giving us checks because we were just selling puts in them and they were going nowhere. So I really wanted you guys to see that this isn't like the home run, make $1 million kind of strategy. And we're not going for broke by doing credit spreads on stocks like Netflix or Tesla or anything like that. What we like to do is find the stocks that are really not going to move that much and just get paid. And we've made a real nice habit over the past year of getting paid every week. Just to give you an idea, of what the experience has been like for us. I've been involved in a lot of services that, not so many, but like 2 or 3 others that are successful. They do really well in terms of performance, but retention, in terms of the number of subscribers that stay on each month, has always hovered a little bit below 50%. Now, apparently that's norm for the industry. Industry standard is around 40% of the people who subscribe to something you're doing will stay if it's a good service. Now, I was always a trader first, not a marketer, so I had trouble processing that. So I looked to get more answers, and pretty much what I was told was that it's not just about the performance, it's about the relationship and the usability. So by doing this, where it's just one call a week for 30 minutes, where we put the trades on and then we do nothing for the following week, it became very, very usable. So everyone's doing it, and they're making, consistent, like it's the income's there. It's not home run, but successful, and then we also show you how it's made. And I'll explain that in a little bit, but the retention rate for this is in the mid-70s, which is off the charts, and that's why it's now become an award-winning service. It won an award at the Financial Publishers Roundtable this year because of the way it performs and the relationship it has with the subscribers. So the reason why I say it on this slide is because a stock like Altria is not exciting. By definition, MO is considered a boring stock for anyone, and for us, we love it because we get to sell it, forget about it for a week, and we get paid every week using it. We haven't done it lately because of market volatility, and in earnings season you have to avoid certain things, which I'll get into, but fantastic stock for us. Microsoft, this was a stock, we sold it 6 times in a row for 100% premium. Then we took one loss where we got stopped out at $39.90. We missed by 2 pennies staying in it because I am conservative and I will take us out of a trade if I see there's risk. So I took us out of Microsoft. and then it ended up going up like 5 points last time. But we were making consistent income checks of 6 trades, 100% premium every time in Microsoft. And you see, it's just simply selling off the levels of support. eBay. This one is interesting. I'm not sure how familiar you guys are with it, but Carl Icahn, our boy again, he was an activist investor, and he was drumming up for PayPal to spin off for eBay. And a lot of times when you get activist investors involved with the stock, what you'll see is what I call a deer in headlights approach to stock. The stock just kind of stops and stares and does nothing because it's waiting to see what's going to happen from the fallout. It's not going to go up or down. It's just going to stay there. And that was exactly what happened in eBay. It stood in this 2-point range. So we sold puts 7 times in a row, all 100% winners. And just to make sure you guys are all paying attention and keep you involved right now, what do you think is another example? Let's see if you can get the answer. There was a stock that recently had a major event that was about to happen that would affect that particular stock. It was an IPO that was going to affect the stock. So the stock stood in a trading range for months before trending higher and higher ahead of the event. And it was purely tied to the event. What stock was that? How many of you know? Good, good, good. Todd, can you see the chats coming in too?
I can. Yes, I can.
Very educated audience. Correct. It was Yahoo around the Alibaba event. And I'm going to show you the time leading up to the event. We sold Yahoo every week. And then when it was a week to go before the event, we said, all right, we're out because the event's happening. And that's when the stock came off a couple points. When you find events like that, you could profit each week by selling the puts. And great work. Everyone either said Yahoo or Alibaba. I think one person was talking about another event, which is probably similar to what I'm talking about. But the biggest event of the year was Alibaba Yahoo, the most talked about for sure. That was, I felt like, the best way to make money in the Yahoo trade without committing over the long haul. Like, I didn't want to buy yearly options or monthly options, just week in, week out, taking profit and saying goodbye before the event. I can't do a presentation for you guys or anyone without mentioning my go-to stock. We actually haven't traded it in a while. It hasn't met our parameters. But when I started doing this, I think of the first 17 trades, probably 7 of them were Verizon. It stood in a 1-point range, and every week just profited from doing nothing. And you know, it's just another great example of what we're doing, and it's more nostalgic that I keep it in the presentation. But, you know, one of the things about selling puts is, especially you're seeing now in this market with volatility picking up, you know, how is it going to do when the market drops? You know, how's it going to do? Well, first of all, as you see in, like, when you see the market fall like it did 1,300 points last week, or the last 10 days, 2 weeks in last week, one of the things that you're instantly thinking is, oh man, when's this going to end? And if you're in long-term plays, yearly options, even monthly options, it's going to get dicey quick, and you feel like you're going to be trapped. But with the weekly, you're so in and out that you could just end it really quickly, which is a really in-control feeling. The other nice thing is when you're selling puts, you have to remember you're selling them below the market. So if you're in conservative stocks, when the market's dropping, there's a flight to safety, meaning money is either coming out of the market or it's going into conservative dividend-paying stocks. So they'll either trend where they are, maybe pop a little, or go down, but not go down as much as the market. So sorry, I have to answer this question. Are you going to talk about margin requirements, this type of bottom line? Not if you're doing the spread trades, and I'll answer that later. But so see, I get so easily distracted if someone asks a question. So with this, in January, the market dropped 1,000 points. We had started the service in August of 2013. The first time we saw a 1,000-point drop was in January, and at that time it became the best month we ever had. And if you take a look at the trades, that's the reason why. Stocks like Walgreens, Abercrombie & Fitch, Potash, SLW, Verizon, Silver Wheaton, KBH, that eBay trade, that's what we owned. Now, we lost a little bit in United States Steel, and we made that back later. And WAG, at that point, we took a little loss, but we also made that one back. But look at that. It was, at that point, it was the best month that we ever had because we were disciplined and we were focusing on conservative stocks. So we followed that up in February, which was a normal trading month, with perfection. And what I mean by perfection is every trade we made in February was 100% winner. You could see all of them, okay? But I don't always just want to talk to you about roses. I want to also show you what it looks like when you have a bad trade because, you know, I get along really well with my audience and we have kind of a relationship where we'll help each other, but I'll also say, like, you know, don't complain if you have a losing trade. There's going to be a loss in trading. Anyone who thinks you'll never lose in trading is wrong. Now, I like to think I spoil my audience. When you have a month like this, someone comes in February, they expect never to lose. But I want you to see what a losing trade looks like because someone just asked, I was to show this anyhow, but Z just said, what if you own the stock and it drops? Let me show you. So Gap, remember I told you about that Gap trade? We sold the 40 put in Gap for 26 cents. And we collected $108 when we sold it. We took ownership of it at $39.74. And what we did was we put in a stop at $39.40. And we send out that alert via email, text, and app. Please know you can't send out text alerts before 12 o'clock in the afternoon. So just email and app. Anyhow, this little trade was a $102 loss. So if you end up owning the stock, you don't have to stay in it. You could buy back the put if you want to. You could have a spread on, so you're hedged. Or you just take the loss, which happens sometimes. And this is an example. We lost $102 in this trade. That will happen. I show this to you because I don't want you to make 10 winning trades with me, then have a loss and be like, what's happening? It's all falling apart. No. The rule is to just be consistent. And when you're consistent with this, you're going to have a really good time. Going back to August, we completed another perfect month with all 100% winners. You can see the trades we did. You'll see Yahoo's in there. We sold puts on it August 5th, August 14th, August 21st, and August 27th. All 100% winners. That was all ahead of the Alibaba event. Does that sound like fun, or does that sound like a lot of fun? And now let's bring this up to date. How are we doing right now? Two of the trades we made recently, one was Walgreens, where we played off of support. And if you see the $60 level, okay, look at that green line, okay? Look at that green line. You can see great support at the $60 level. That's not like a week or 2 weeks. Look at that. It goes from August through October, okay? So the drop in Walgreens was after the inversion event. We were not trading it. Once that inversion news came out, we thought it was too high and was trading more like a tech stock. Once it got back to 60 and settled, it was a pharmacy stock. So when the market was really down 2 weeks ago, we sold this and we collected 100% as a winner in a market that was really getting hit hard. And the other trade we made, I think the market at that point was down 300 or 400 points, and we made 100% in WAG. And the other trade we made was in Apple. Now, Apple was playing off of support at the 98. You could see that green line. But we also anticipated another deer in headlights scenario, okay? And by that, I mean it had earnings, and those earnings came out last night, right? It came out last night, and the stock traded up. But ahead of those earnings, the stock was really resistant to the market. So we put this trade on 2 weeks ago. It was a 100% winner. And then this week, this past week, when the market was really dropping, I jumped the gun a little bit. For the spread trades, we left them on, and those ended up being great because you knew your downside was covered, so you weren't getting nervous by the volatility. So Harry, just to answer your question right there, you're not getting nervous by the volatility when you keep those trades on. And someone said, can you show broker verified statements? I don't have it on the slide, but I make the trades live every week on the call. You see my account. I go into my Fidelity account. I'll put a trade on right there. You see me making them. Any trade I'm giving out for this entire service, I made myself, and it's either the same position size or a bigger position size. Okay. So this week, though, in Apple, the spread trades, we were able to sell in them, so know how. But for the naked, if we did them naked, for anyone who did them naked, I did issue an alert. I said to take Facebook off last Friday. I'm sorry, 2 Fridays ago, going into last week. And the reason was because I felt like the market was going to get killed based on the speed and volatility. Facebook, everyone got out at 74, which was great. It went down to 70, so I was a hero, but then it came back up. But you know what? I could live with it coming back up. I'm always going to err on the side of caution because when I do this, I'm thinking of it as working with literally as if I were doing it for my family and my friends. That's how I treat it, and I wouldn't have wanted them in the market. Apple, too, we took off a little bit early because we knew we were going to get out ahead of earnings. I don't take on the risk of holding it to earnings. But this stock, Apple, even before the earnings, has been outperforming the market like you wouldn't believe in terms of its strength. And that's why we were selling puts in this recently. And as far as aggressive versus conservative, I waited a while for Apple. Like I would have never done this when it was trading at 700. It would have been too uncomfortable. But now it has a PE of 16. So that's equivalent to like Wells Fargo or JP Morgan. Okay. All right. What's it say? Why show real statements? I answered that. I said I make the trades live on the thing. I could show you my stuff. I can't move my screen into this thing. But no, this is not paper trading. I'm making all these trades. Okay. But I get it. You probably want to believe that it's not real so you don't feel like you failed by not doing it. I don't even understand what it's saying. Okay. All right. Does that make sense to everyone? You guys all with me? You understand this? More to why Fidelity instead of Interactive Brokers Trade Station. I've always used Fidelity. I feel comfortable in them, but I actually would say that if you're trading options, that Ameritrade's Thinkorswim platform is the best options platform. And I know Options Monster a lot of people like too. Interactive Brokers is the cheapest, but you know I don't know how well they compare. Okay. All right. Thanks. Awesome. All right. Oh, I like this. I'm not used to. It's funny. I answer every question anyhow, so I did answer that guy. But I didn't realize. I believe I lost my time here. I wish I could go into my screen right now because what I'm trying to say, he thinks it's paper trading, but I go on the thing and I make my trades live on the call. And the way we do it each week, which is cool, is we show the making of the trade, and then I let everyone go first because the stock, depending on the volume, it can move a penny or two. Once all of us, there's hundreds of people that are doing this. So when they put their orders in, it could move a penny. Sometimes, like a stock like Apple doesn't care about us. There could be 1,000 of us trading 3 contracts each. It will go up in our face. It doesn't matter. But just for fear of not trying to front run the trade, Todd puts the trade on so everyone could see it, and then we let the trades go off so everyone could do it who's live on the call, and then I put my trade on. So usually I'll miss it by a penny, the exact price, because I let everybody else go first. But as I said, I do every trade we made. Okay? Charge around the door. Okay. The number of traders use Thinkorswim to do their analysis, but actually place their trades with IB because of the high cost of commissions. That's not a bad idea, actually. So the call is every Thursday, 11:30 Eastern. And let me tell you guys what I'm offering for Trading Pub tonight. If you guys want to get on, and I already love the group here, Todd. I could see some of the rock stars in here because of the way they jumped on that other guy, and that's what our call is like. You get. It's exactly what our calls are like. You get one person who says, like, why did this happen? And you have 20 other people speak for us, which is fun. All right. So let me show you about what we're offering now and how you can take advantage to give you all the details. Okay? As I said, it's weekly options picks. Every week we identify the optimal trades to upgrade your portfolio with. Okay? Now what's cool about this is we show the making of the trade. And think of this as like a restaurant where you see the chef in the kitchen and you could see them preparing the food. That's an open kitchen versus a closed kitchen. So what we're doing is we'll get on the call and we'll have our list of like 20 or 30 stocks that we want to go through, and then you'll see us eliminate trades. No, that one has a dividend. You can't get paid the dividend when you're selling a put, so we won't do that. That has earnings. We're not going to sell a put into earnings. It makes no sense, so we're going to eliminate that. No, because we don't like this level. And then when we end up with our trades, like we did yesterday, we put on Walgreens at 60, and if you see it went to 61.70, and we put on Twitter at 49.50, which went to 51.70, and it's still above 50. So those trades, as I said, Walgreens already jumped out to a 70% gain, and Twitter is also in the black right now. And we explained exactly how we eliminated like 20 stocks before we finally did. Like one we got early, another one we got later on, but we eliminated a lot of stocks in between, and we explained why we're doing that. Okay? So you get those picks every week, once a week, every Thursday at 11:30. Now, if you don't want to see the making of the trade, usually by 12 o'clock we're done, and then we send out the picks to everyone via email, text, and app. So not everybody wants to see how we do it. Some people just want the trades. As soon as the call ends, we send out those trades to everyone around 12 o'clock every Thursday for options that expire the following Friday. Okay? All right. Portfolio management. Okay. So as I say, we'll manage every position together, catering to all account sizes. 11:30 Eastern time, yes. So now, and there's an OMM site where you could get in and check out everything. So with portfolio management, if you end up in a position, if you take ownership like we did in SLW that time or LNG, you're buying at 22, you're not going to know to stay in until 26, or where's your stop. So what we do when we take ownership is we say, here's where our stop is, and then as it moves up, we move up the stop. Sometimes we'll put something on offer, but usually we're following a stop up. We're never going to sell at the high, but we want to allow the stocks to work for us, ideally collect some dividends, and then take profits. There's no doubt that every week if someone's not sure what we're doing, they'll say, hey, what are you doing? And I answer them, but I also say, if I'm making a move, everyone will know about it. Anything we're doing, anytime we think there should be a change, we should do it. So an example was last Thursday, we didn't like the market behavior, and we didn't want to put on trades over the weekend. So what we did was we just moved the call to Monday, and we did it then. Also on Friday, when I wanted to take off the Facebook trade, my wife was away. I had the 3 kids. I knew I was going to get a lot of questions about my reasoning, which I explained in email, but I still issued an alert in the middle of the day, towards the end of the day Friday, saying to take Facebook off at 74. It would have ended up working out, but on Monday when the market was down, people were very happy. So we're always talking about these trades. Todd and I speak multiple times a day, and we're always communicating about these trades, and we're always giving you that real-time analysis. So market analysis, I showed you guys at the beginning how Todd's on those calls. And he hosts Fox Business. He's the guy they turn to see where we're going in the market. Yesterday it was on the front page of Yahoo Finance. So he explains the why behind every trade along with me, and he gives us a macro perspective on what's going on in the world. So when we're talking about, when you had the stuff going on with Ukraine and Russia, and when we're talking about Ebola, and we're talking about any kind of economic event or triple witching or anything, Todd's factoring that into the kind of trades we're putting on and the number of trades we're putting on. Special group training, just to really bring it home, because this is a very specific system that we're using for this weekly income strategy. As soon as you join, you go into a site and you get a 2-hour bonus exclusive group training session with Todd and I, where we show you on, I think, 3 different platforms how to use it. So we show you on Fidelity, Thinkorswim, and Option Monster. And there's also a second training video in there too, where Todd just gave real-time options education. As they said on Fox, there's no one that knows more about options than Todd. And with this, we're going to limit it to 25 people. Tonight, obviously, you guys see there's 166 of you on here. The reason why we limit it to 25 people is because we want to have the relationship. We want to be able to answer the questions like we did in this setting. We want to take time to make sure nobody gets left behind and everyone enjoys it. And it makes for a very pleasant experience. And when we had a live event in Las Vegas last year and we met 75 people live firsthand, we realized the value of these relationships. And if you're able to take your time and answer questions, then people will be with you for years to come versus a week or a month. So that's why it's limited to 25 people. So if you want to be one of those 25 people, the way to do it, we have a special link for you right now. And you should be able to click on this link right now. And I'm going to bring it up because we created pretty cool pricing for you guys. I think you're going to like it, and I'll walk you through it as you go to the thing so you feel comfortable moving forward with us. I'm just going to bring it up on my screen as you're bringing it up on your screen. Okay? I'm multitasking on different computers, so it takes a little bit of time. Let me just walk you through it. Okay. So if you see for the first one, for the Trading Pub webinar attendees, I'm not the one in charge of price. I'm not trying to be selfish. I thought I'd make it more expensive just because of the amount of time Todd and I take each week to answer questions. But the regular price is for 2 years is normally $19.98. Today they did it for 35% off, so it's $12.97 for 2 years of the service. Just to break that down for you, if you're doing $12.97, and remember the service is averaging $150 to $300 a week. So if you break this down, it would be $12.97 divided by 24 months divided by 4, so it's $13.50 a week. Okay, for a service is averaging $150 to $300 a week. If you look at option number 2, the $9.95 with 20% off is $7.95 for a year. $7.95 divided by 12 equals $66 a month, which is $16.56 a week, again, for $150 to $300 a week. Okay? When you click, it pops up right on the screen next to the webinar. So if you click on it, it will pop up right on the screen next to the webinar. So by clicking on it now, it will not take you out of the webinar to see what you're talking about. So you don't have to X out of that. Okay? Now, something very important about this is our goal, the reason why we chose that $7.95, if we make $200 a week, that means in the first month you paid for the whole year. So that's the goal, and we've done that many times, and people love that. If you decide in the first 30 days that you are unhappy with this service, normally we would say for the $7.95, we'll give you $6.95 back, and we will keep $100. The reason why I say we'll keep $100 is because a lot of times people ask a lot of questions, and we pay a lot to have a great customer support team here because we don't want to answer questions just via email. We'll pick up the phone and we'll call you and we'll show you exactly what's going on. Hi, one sec. We'll show you exactly what's going on. So it's done over the phone, it's done over email, and we answer every question. If you still used it and you were like, you know what, I hated it for some reason, I'm not going to argue. Reputation's too important. I'll give you the full $7.95 back. But usually we keep $100 for customer service. In the past, for the $12.97, we've kept $200 for customer service. But then someone said, well, shouldn't it just be $100 for 30 days? I'm like, you know what, you're right. So the same thing, if you pay $12.97 for the 2 year and you're not happy in the first 30 days, again, we would just keep $100. And if you're completely not happy, then you can just have that back too. The point is, we try to go over and beyond about customer service. So to claim those spots, you could go now to order one of those 2 options, and we look forward to creating that relationship with you. As that said, you could ask questions, especially if they're related to making this decision now, so that I could help you. Starting with, you go over margin requirements. So if you're doing the naked, I've always said you want to have 15,000 in a trading account with 4-to-1 margin intraday, 2-to-1 overnight. But when we trade stocks like Apple, you would obviously need more, or you could do less size, and that does tie up buying power. For those of you that don't want to tie over buying power, if you're doing a spread trade, Todd, bringing you in now, with spreads, especially questions, and thanks for being here with me this whole time. If someone was putting on, let's do two expensive stocks, okay? Let's say you did Apple, which is $100, and you did what did we just do? Facebook, which is $75, and you do it as a spread trade. How much buying power would that tie up?
Okay, on the spreads, if you're doing, we do them sometimes $1 wide or sometimes $2 wide. The way to just calculate the margin quickly is if we do a $1 wide spread, the margin requirement is going to be $100 per the number of contracts that you trade. And we typically trade 3 contracts per trade. So your margin requirement on the spread would be $300. Sometimes we'll go to a $2 wide spread, so your margin requirement would be $600. But that's a great way to not tie up cash. If you're a little short or you don't want to put it all into one thing, then you use the spread, because that allows you to trade the same trade basically without tying up as much margin money. So it's just simply the amount of the spread. And even we did one like Netflix, which is $350, we would do like a $2.50 wide spread, so we could use for $250 margin. You would have that happen in Netflix as well. It's always the amount of the spread. That's the amount of margin that you are charged by the brokerage house.
Okay, and Linda, hopefully that answered your question. Now, Harry, you said you wanted one specific example with numbers on entry and exactly how you manage a trade. I'm going to go back because I tried to give you a lot of them. Every trade we showed you, a real trade. So let's go back to the very first one, okay? Maybe you weren't here for the beginning, I don't know. So here, a $70 Starbucks trade, okay? $70 Starbucks trade. It was trading at $72.50. We sold the $70 put for 67 cents, 3 contracts, taking in a gain of $201, and the option expired worthless, and we collected $201. Had you done that same spread, and this one, when I first started, I was doing only naked. We started keeping the spread track record like 5 months ago. So we offer both. That's a good question. Let's make this perfectly clear. Are you always doing spread? For every trade that we do, we say this is how you would do it as a naked trade, and this is how you do it as a spread. So let's say for the spread, we sold the 70 for 67 cents, and then we bought the 68 for, I don't know, 20 cents.
20 cents. In
that sense. Then you would have made 47 cents, but you would have had your downside protection covered. Now, for that specific stock, so for the, now, okay, and I'm glad you asked this. So normally every week we're selling naked or we're doing the spreads. In this environment, starting this week, because of the extreme volatility, we only put on spread trades. So to be perfectly clear, the exact spread trade we did for this week was we sold the 60 Walgreens put, 3 contracts. I sold 20, but we sold the 60 Walgreens put, and we bought the 58. Okay, can I type in? I can't type because I'm not using my keyboard. We sold the 60 and we bought the 58, and the midpoint was 35 cents. 35 cents times 3 contracts. We collected $105 on the trade. Okay. For Twitter, we sold the 49.50 and bought the 47.50, and the midpoint on that one was also around 35 cents. So combined, we made a little over $200. We only did 2 trades this week. Normally, we do 3 or 4, simply because of market volatility. Is that as clear as I can answer you, Harry? If you put the stock, will you sell calls for income? No, we will not. And we get asked that question often, Frank. But we will not sell calls for income because it's a different kind of trade. And if you're selling the call, then you're forced to hold the stock. So let's say you sold the 75 put in Facebook, right? And then you end up owning the stock around 74, and you sell the 76. but Facebook goes to 67. Well, all that money from the call isn't going to make up for what you just got crushed in with Facebook, right? And then it becomes a different kind of service. And what we're just looking for is the income every week. Okay?
Can I add one thing here, please?
Yeah.
One thing about selling calls as well, a call selling strategy, the problem is you limit the amount you can make on the upside. The reason that we take delivery of the stock if we're trading the naked is because we're looking for a much bigger upside. The minute you sell a call, you eliminate how much money you can make to the upside while still keeping a lot of downside risk in play. And that's not how we want to trade. That's not what this service is about. This service is about what I've done for over just about 35 years. And I used to have to do it on the quarterly options because they didn't have weeklies or monthlies back then. But when I started in 1982, we used to do this on a quarterly basis. And all you're doing is you're trying to grind out and generate regular revenue for yourself. And now with the weeklies, this has become the best opportunity for the individual that has ever come to pass, because you can now compete in the same arena as a market maker, because you now get the same opportunities. And with the narrow bid offer spreads and with the liquidity that we find in the ones that we use, we believe that we can grind out profits on a weekly basis, which we have done for the past year. And that's how I trade myself. It's always about the weekly and about grinding it out, whether you want to do nakeds or spreads. But again, going back to covered calls, if you do that, you're immediately eliminating your upside potential. So there'd be no reason to do that. And that's not what this service is about.
And if you're a stock trader and you've never done this, that's who I was. And I learned it quick. And in that training video and in that month, you will see what you need. Now, a couple more. We're doing weekly options. So every Thursday we put on the trade and they expire the following Friday. All right, Steven? Harry, Todd's been putting on the naked puts a lot. He's been putting on the vertical spreads along with the naked puts since the beginning. I was keeping a track record of the naked, and then 4 months ago we started keeping track record of the credit spreads. But we've been doing them the whole time because over half our audience only does the credit spreads. Paul, I trade from Australia. How important is it to manage the trades while the market is open? Well, we're settling the puts on a Thursday, so ideally you would be there to put the trade on. And if there's going to be a stop put in, we issue the alert, and it's usually done. The first alert is done before the market opens. So we say this is where you want to put your stop if you're going to own this stock, which doesn't happen often. Over 80% of the time, these options expire worthless. And if you do sell naked and you take possession of stock, do you need to add significant dollars? Yes, but there's stocks that I want to own, and we're doing 3 contracts. So if I sell Altria at $35, well, now it's $45, but if I sell Altria at $45, am I comfortable owning 300 shares of Altria at $45? And the answer is yes, I am. Yes, that would be 4,500 times 3, so it would be $13,000 investment in a stock that's going to pay me dividends I feel comfortable owning. And if you're not comfortable, then you do the spread. And the one thing is, if you, okay, so Z said I never buy stocks, always sell puts on stocks. Perfect. The one thing is, if it came in between the middle of the spread, okay, if it came between the middle of the spread, then you would have the ability to take ownership. So every Friday, if that could happen, we issue you multiple alerts throughout the day, at least one in the afternoon saying, at like 12 o'clock, if you don't want to own the stock, it's between the midpoint, take the trade off today.
And we also talk about it on the Thursday before, because I have a pretty good idea where we're going to be. And just to Paul in Australia, I think in the history, I think we've only issued 2 special alerts, if memory serves me correctly, in the entire time. Other than that, we've always waited till the following Thursday, and we give you plenty of time to get the information you need. And we do have many in Australia, New Zealand, and people all over the world that are using this. So it should not be a problem for you, and I don't foresee it as a problem because I have many people that I talk to from Australia.
Email Stephanie@adamesh.com, and if you want my phone number, she'll give it to you, or we could call you. And that's Stephanie@adamesh.com. Okay. Harry, very simple. It's $695. You seem like an active trader. If you pay it, you could even not make a trade for the month. And if you don't like what we're doing, good, get your money back. I don't care. I only want people with me if they're happy to be with me. And week in, week out, we come on a live webinar like this, not on Omnovia, but we communicate with you, where you could ask us our questions. We show you what trades we're making, and you could see for yourself exactly how we're doing. The track record's been fantastic. The first thing you guys see when you get access right now is the training videos on the website and the track record. You can see every single trade we've made, okay? What other questions do you guys have while you're on this call?
And for those of you,
congratulations. Hey, Todd, you there?
I'm here. I am. I was going to say that, I forgot what I was going to say now, but for those of you who are concerned of what the market condition is like, and if you are concerned that it's going to go down, that actually benefits our service, because the more volatility in the market, the more premium that they have to pay us to do what we do as well as anybody. And that's Adam picks great levels in great stocks that keep us in, and all they're doing now is paying us more money to make the same trade that we made it last year for less money. So it's, again, no matter what the market conditions, this service performs, because we aren't just throwing out trades to throw out trades. We are actually analyzing and breaking down the levels of the trade. And as you know, in the business, there are funds out there that have to be long only, and there's funds that trade. So there's plenty of long only buyers. So when the market conditions get tenuous, as they have been the last couple of weeks, we know that stocks that are going to hold and that the big firms are going to be trading into, which is where we typically sell puts.
All right. Listen, guys. You say 100% winner, you mean you keep the entire premium? Yes. And now, Harry, you've asked a lot of questions, and I love them, and I love anyone who asks any questions, and I like that you're trying to transfer your skills to trading. And so this is my challenge, okay? 9 of you guys already signed up. There's 16 spots left, okay? There's 115 people left on this call. 16 people, join me for a month. Come on the calls, question everything we do, watch what trades we put on, see the results, see how we make money week in and week out, and be a member for years to come. Okay? That's what I'm looking for. 16 more people. We have a couple minutes left before this goes, so you click on themeshelite.com right now to go to it. But with 111 now people left, I would expect that we hit our fill. And that's all I'm looking for. I go into events like this, and I only look for a core group of people that really want to do this. Okay? That was a question I had. If the VIX drops to 12, does that change your target sectors? Yeah. Yeah, we're always talking about the market each week. Everyone always says that it's the most educational thing they've ever experienced too, because of the way we break down the trades. The alerts would be sent at 12 o'clock p.m. because at 11:30 is when the call's done. So we send out the alerts after the trades are made. All right, Jose? Now, if anyone is sitting here and you're on the fence, I do believe that clicking on this and the $12.97, where you literally get $11.97 back in 30 days if you're not happy, is the best option. The surprise event, because I like to so if I'm already doing this, been selling this for over a year, why do I need this? Because the secret sauce is in which stocks we target. I don't know what you've been trading, Richard, and you know what? If you've been doing it successfully for over a year, don't change anything. Don't do it. But if you feel like you have trouble in terms of which stocks you want to sell the puts in, that's what I always said sets us apart. Anyone could sell puts. We sell the right puts. That's how in February we have a perfect month. August, a perfect month. January, the market drops 1,000 points. That's how we stand out. I think our secret sauce is in the puts that we sell. Anyone could sell them. You already said, okay, makes sense. The surprise event in 2015, in December, we're also going to be hosting a Game Changer special event. We do webinars like this from time to time. You will have access to this included with your own membership. We'll give you an overview of the year ahead. and talk about possible game-changing trades for 2015. If you guys are not used to coming in at a $7.95 or $12.97 offer and you'd like to try the monthly or quarterly rate, you could go here and charge it, and you could go to this and click on meshmonthly.com/tradingpub. And if you take this offer, you know what? And exactly, Richard. If you take this offer and you decide within the first 30 days that you're happy with the service, you can within the first month upgrade to that year and take it from there. Okay? Yana, you're awesome. Thanks for sending everything out. I don't want to keep you too much longer. I still see, one of my things is I'm one of those guys that has trouble saying goodbye. I still see 108 people online with us. So I assume that I like to put people to a decision. Either join or don't join, but ask whatever questions you have now while you have me so you can make that decision. Okay? You'll be able to get the trades that we put on Monday. It's probably a little late for them. You won't do them. But we will be putting on new trades this Thursday. So if you join now, today's Tuesday, you will have 2 new trades that we put on at 11:30 this Thursday. So who wants 2 new trades on Thursday? How many of you guys? I hate saying goodbye so much that my girlfriend from 10 years ago is now my wife and we have a kid. Awesome. That's really funny. All right. So, come on, guys. Put me to test. Either go. There's someone. Richard, it's 2 to 3. 2 to 3 a day. It's too much. You're over trading. We'll do 2 to 3 trades a week, possibly get to 4th. Obviously, you're active. We look forward to having you contribute on the calls. I see you just signed up, so welcome aboard. And yeah, this Thursday at 11:30 Eastern, we'll be doing that call. And it's fun. It's a relationship with you guys. And I know, I guess when you're on the fence and you've had bad experiences before, I will say that, you know, coming on with Todd and I, it's fun. It's interactive. Todd, does your son do this?
He does. My son has done it. I taught it to my son. He came to me when he was 16 and said he wanted to get a job, and I said, there's no way you're getting a job. And he said, why? And I said, because you're playing 3 sports and you're in school and you got to get ready for college, and I'd rather you get good grades and take care of your sports, and maybe you'll get a scholarship. Well, he says, well, but I want money. I said, well, I'll give you money. He says, no, I want my own money. I said, if you want your own money, learn how to trade. So I taught him how to sell credit spreads when he was 16. He's now 20. He supports himself through college. All of his accessory money that he likes to play with, it comes all from his own trading account. He trades once a week, puts his trades on, and he follows up with them on the next week, and either gets them off if they're a loser, takes them, lets the winners expire, and does it again for the next week. And that's what he does through his college life right now. And he's very busy because he's playing baseball at school and president of the fraternity. So he's very busy, but he finds time once a week to put these trades on and go and take them off the next week and take his money and continue to have his extra cash to play with while he's at school.
Thanks, Todd. Richard said, so if I do the 127 for monthly, will I make that much for the first week on Thursday? Well, you would sell the puts on Thursday. You'll be above that. Yeah, because we wouldn't sell for less than that in a week unless we don't do trades, and then we'll put them on the following week. And yeah, and then you'll take it from there. So once you put those trades on, it shows up in your account as if like that's your 0 point, the money you took in, and then it moves from there. So like if you make $200 and then it goes down, it will show as a -50, but the 200 came in. I assume that's set up differently on all different accounts.
They're all changing to that though, because it does show. It's a regulation thing, but they'll all show as a credit. Eventually, they're all going to switch to the same thing and show it as a credit balance in your account. There's different ways that they charge it off, but it'll all be taken care of. It's all the same.
All right, we literally just had like 4 or 5 more people come in in that time where I stayed on the call. So thanks, Yana, for allowing me this extra time. I'm looking for 3 more people, Yana, and then I'm going to leave and go home. And go to sleep early because there's not football on tonight because that game last night was fantastic. All right, Richard, you go click on that link. And you're in. So Richard's in for one. 88 people left. Someone asked me a question that says why you wouldn't do it. And give me the chance to answer that objection now, or Todd right now.
Ask me anything.
Anything. We're here. Like this is not your average experience. Do I trade ETFs? The last ETF we sold to put in was the VIX. The market went down and the VIX went down too, and I threw a tantrum for 3 weeks where literally people on the call had to say to me, Adam, get over it. It's just one trade. Let's move on. No more talking about the VIX. So we've done some gold ETFs. I think we did GLD. I try to avoid ETFs. It was up to Todd. We'd probably include one every week. We battle about that. Can I say we'll never do an ETF again? No. But will I be doing ETFs this week? I don't know. I mean,
Maybe.
I don't know. I would love to sell an inverse ETF right now based on where we're at as a spread. But we'll see. Yeah. What's the reverse of the diamonds, Todd?
The reverse of the diamonds is the dog, or one of them is the dog.
Yeah. I would like to sell a put. I do a vertical spread in the dogs with some protection. I won't lie. If you've never traded stocks or options, what account size do you recommend to start with? 2,500. Thanks, Raleigh. I'd say like 2,500. It's always a good point. For stocks, I always say 5,000 or 15,000. For options, I say like 2,500 would be a good amount. I really do. I appreciate the Trading Pub team. I like how involved you are with the event, and really appreciate Yana, you chatting everything out and stuff. You go above and beyond. As we said before, anyone who has further questions can email Stephanie at adamesh.com, and she'll connect with you. 2 people wrote in they had trouble signing up, but 1 person, and we'll help you. Other than that, this is my A game. I've met with companies that said, our audience won't like options. Can you create something specifically for them? And I've always said, no. Right now, for this past year, this is the #1 thing I like doing. And so if I'm going to be talking about anything, it's going to be this. And Todd's there, like on Fox Business, talking about this. Yeah, can I go into my trading screen from here, or no? It's only said I can't because it's a Mac, right? Yeah, I can't. Sorry, I know I can't. I just wanted to show that guy that trades, but I like to share my screen on a Mac. There's like a 50% chance if I go to do that it will just shut us off. So let me see. Projector is required. No, it's only for Microsoft. It won't work on a Mac. Yeah, it won't work on a Mac. I remember this when we did that charity event. Remember I trained for a while. I wouldn't do it. All right. Any further questions? No, you say goodbye first. You say goodbye first.
You say goodbye.
I'm trying to get out the phone. I see Darth Trader on here. I need Darth Trader in my group. Darth Trader, did you sign up? Best name ever. Darth Trader, did you sign up? And if not, why? How do we not have someone named Darth Trader in our community?
How about Bubba J? Must be my brother.
Yep, Darth Trader and Bubba J. Who else? 11:30 Eastern, Richard. 11:30 Eastern. That's when the call will be. Got it. Good. All right. We'll see you then. So thank you, everyone. Todd, Harry, go to stockgumshoe.com. You'll find some. I think that's the only place where they review it. I don't know where else it will be. I thank you for the question, Harry. I would love for you to sign up and not even do the trade. Just watch for a month, and then go tell your community what you think of the service. You know? I can't let you in without paying the $7.95, understandably, or the monthly, because nobody else could get in that way. And it's a good service, but like I said, if you're not happy, just let me know. Do nothing for the first one. Just see what it's about. Paul, if you email Stephanie@adamesh.com with her number, you see, Paul, that's for you. That was freaky, Darth Trader. Paul, email Stephanie. All right, awesome, guys. Todd, you're the man. Go enjoy the World Series. Are you rooting for the Royals, or are you rooting for the Giants?
I'm rooting for the Royals. I'm rooting for the Royals because it's a feel-good story. So I want to see the Royals go. And besides the last,
this would be a feel-good story if Harry joined and we made him some money. That would be a feel-good story.
That would be a best story. Harry, you're wearing out the computer with all the questions. But look, at the end of the day, this is an unbelievable service. I don't know how many times you guys get a chance to actually talk to providers.
Harry said, oh my God, I got to answer this. I'm sorry, Todd. Harry said, according to a review online, it says you charged someone $4,500 and was not happy. Yes. Out of 300,000 people on the email list and over 4,500 members of the stock community, there was somebody in 2009 that claimed they were not happy after they had all their coaching sessions, were a member of the coaching community, it's not this service, and asked for a full refund, threatening to write something bad on me online if I didn't do it. I said, go ahead and write something bad online because I'll respond to it. And I responded to it there, I'm sure. So if you want to make a decision based on that, I go to the best dentist in Manhattan. Literally, she'll come in on a day off if I'm in pain and meet me. It was 2011. I said 2009. It was years ago, whatever. So it was 2000, and someone went on Yelp, and same thing. They were asking for her for money back, and she wouldn't give it. And they went on and did a bad review, and it's the first thing that comes up on Yelp. And she's the best at online. You take me versus anyone in this industry, Harry. I have the best reputation there is. So yes, out of 300,000 people on my email list, I'm sure there was one person that was unhappy. It's also probably the person I kicked out. There was one person that in my private forum was being abusive, and they got kicked out. But yes, I think you'll find more bad reviews about Coca-Cola and McDonald's or any homegrown company.
And where else do you get the principals of the company talking to you, either on the call live every week and doing the same trades with you, or picking up the phone and calling you if you have a question?
I am Sam. Yelp, crooked crap. Never believe anything. Let me see. All right. I enjoyed this. Tell them that Paul, you're emailing Stephanie, right? Now I got it. Paul, that number wasn't working, so if you want, email Stephanie again with the right number. All right, guys, this is fun. Yeah, we have climate traders from Canada.
In fact, let me just interrupt you. I was on BNN today before I came here for about 10 minutes talking about Yahoo with Michael Hainsworth. So you can see me on BNN usually about every other Wednesday, but I'm not going to be a regular on Michael Hainsworth's show every Tuesday at 4 o'clock Eastern. You can watch me on BNN for those of you in Colorado. I mean, in Canada, Colorado, Canada.
I'm not interested in paying any more for short-term capital gains. Necessary. You guys focus on strategies that fall in the 12-digit contracts. Is options and ETFs fall into this category? I have no idea, Marcus. I just trade. I make money. I know you could ask your accountant, and there's a lot of provisions where if you make a certain number of trades, you're considered a professional trader. And
we can't answer that because we're not accountants, but there is a 1256 filing. You have to clear that with your accountant to make sure that you qualify. It's not just the type of trade, it's how you're making the trades and what you're doing. So that needs to go through your accountant, but there is 1256 filing for people that do trade.
Harry, if you try for 1 month and you don't like it, I think typically it's not refundable, but because you just cancel the payments going forward, because I think it would just be like $100. But if you try it for a month and you don't like it, you just let me know, all right? I welcome you too. This would be great if you join after these questions. Yes, you can upgrade. All right, thanks. No. Todd, you're the man. Yana, guys, I really appreciate you. Raleigh, thank you. And at the it would convert to the difference between $7.95 or $12.97 minus what you paid for that year. So if you did $12.97 for 2 years and you had paid $127 a month, then it would be $11.70. All right, just go right there. I'm gonna go now. Watch the World Series. I welcome you guys aboard, and thank you for everything, Todd, and thank you, everyone. Bye.
Thank you, guys. Have a great time.
All
Thank
right,
you so much for being here.
thank you, Adam and Todd, really for that terrific presentation on how you trade weekly options for consistent and steady income. I was very interested to just learn more about your program and the comprehensive services that you offer, including those weekly options, picks, and